In this video, today we are going to talk about the basic terminologies, that is part 2. Children, I would like to recapitulate what we discussed in basic terminologies part 1 video. We had discussed, children, the terms such as capital, assets, liabilities, stock, transaction and entry. Now today we are going to discuss about revenue, expenses, purchases, sales, debtors and creditors. Before moving further, children, I would like to recapitulate all the terminologies which we have used in the previous video. That is, whatever is explained in the previous video, let us recapitulate it first to move further. Now, talking about the first terminology, which was capital. Children, when we talk about capital, capital is the amount of cash, goods or assets which is initially invested by the proprietor while commencing or starting off his business. It is the invested into the business to earn profits. In other words, children, we mentioned it that it is the excess of assets over liabilities. So, children, this is what we discussed about capital. That capital is excess of assets over the liabilities. Now, moving further, in the last video, we discussed about assets. Children, assets are all the resources of business having economic value. These resources, children, help the business to earn a profit and have future value. We also discussed that there are different types of assets, that is fixed assets, current assets, tangible assets, intangible assets, fictitious assets and liquid assets. Now, moving further, in the last video, we also discussed about liabilities. Children, when we talked about liability, I mentioned that liability is the amount which business owes to others. There is certain amount which the business is under obligation to pay. In this, we also discussed that there are two types of liabilities, that is long-term liability and short-term liability, which includes creditors, bank overdrafts, debentures issued by the company. Moving further, children, we discussed about stock. Children, if you remember when we discussed stock, I mentioned that these are the goods which are left unsold in the business at the end of the year. I also mentioned that it also includes opening stock and closing stock. Now, children, let us start off with the terminologies of today. That is, first let us discuss about revenue. As to what is revenue. Children, revenue means the receipt or return received by the firm. Now, how is this revenue received by the firm? Let us know that. Children, when we talk about revenue, it is the sum of money received or to be received from the customer or clients of business as a result of sale of goods or service to them. So, we can say that revenue is the monetary expression of the aggregate of products and services transferred by an enterprise to its customers during the period of time. So, children, revenue is inflow of assets. Now, what does it result to? When we talk about revenue, children, it results in increasing the owner's equity. Receipts from sale of goods, income from rent, dividend are some of the examples of revenue. So, children, we can say that revenue is the amount received by a business for selling goods or services. This amount is received from day to day business activities. Now, when we talk about revenue, it can be in the form of rent, interest, commission, discount, dividend, etc. So, the key word to remember when you know about revenue is that it is the amount which is received by the business for selling goods and services, and it is on daily basis, that is with the daily activities of the business. Now, moving further as to what is expense. Children, when we talk about expense, expense is the monetary value of input of resources consumed. Children, when we talk about expense, it is the cost which business incurs for producing goods and services or for using services. This includes payment made for wages, salaries, freight, advertisement, rent, insurance. In other words, children, we can also say that expense is the cost of earning revenue. Moving further to know more about expense. When we talk about expenses, children, we can also say that expense is the expired cost. It is directly or indirectly related to the given period of flow of goods and services into the market of related operations. We can also say that expense means the cost or sacrifice incurred for earning revenue. So we can say, sum up, children, that the cost which business incurs for producing goods and services for using the services is called expense. So the key word over here is it is the cost which the business incurs. Examples of expenses, children, as discussed earlier also, are wages, salaries, freight, advertisement, rent, insurance. So it is the cost of sacrifice incurred for earning the revenue for the firm. Now, children, let us discuss about purchases as to what are purchases. Children, when we talk about purchases, purchases means the total amount of goods purchased by the firm on cash or credit. Kindly note, purchases includes both on cash and on credit. Children, when we talk about purchases, it does not include purchase of any asset by the firm. That is, say a firm has purchased machinery, any kind of stationery, that cost will not be part of the purchases. Goods taken by the owner for his personal use. Say he is into the manufacturing business of, say, paper. So if he is taking out some piles of paper to his place, that cost will not be included in the purchases because he has used that for his own personal use. When we talk about any trading business, children, purchases consist of goods for resale. And when we talk about any manufacturing business, children, purchases consist of the cost of raw material, semi-finished goods and finished goods. Now to sum up as to what are purchases. Goods bought for resale are called purchases. This may be in the form of raw material or finished goods. Purchase of assets, kindly note down, purchase of any kind of asset, that is plant, machinery, land, building, is not part of purchases because assets are not purchased for resale. They are for the company to use them over the years. Now let us talk about sale. As to what do we mean by the word sales in business. Children, when we talk about sales, it means the amount of goods sold to the customers on cash and credit. Now, when we talk about sales, children, when purchase goods are sold in order to earn profit, they are termed as sales. Say I have purchased some raw material and now I convert it into finished goods and sell them into the market. These are my sales. When goods are sold for cash, kindly note they are known as cash sales, and when goods are sold for credit, they are known as credit sales. Now, let us talk something more about sales. Sales does not include, children, kindly note, the value of fixed assets sold by the firm. Say any fixed assets which has got old, obsolete, and if we sell that, that will not become part of the sales. Goods sent on consignment and goods sold on hire purchase basis are also not included in sales. The amount of goods returned by the customer are also deducted from the total sales to calculate the amount of net sales. Say any customer has not liked the product or there is some problem with the product in terms of its quality or not up to the mark, that has to be deducted from the sales to get the net sales. Now, moving further, children, as to what are debtors and what are creditors. Now, when we talk about debtors, children, a person who owes money to the firm on account of goods sold on credit is a debtor. Children, when we talk about debtors, it involves total amount of money which customer has to owe to the firm. When goods are sold on credit, the money which the customer have to pay and he has not paid for receiving the goods and services, he represent debtors. Loans and advances granted by a firm are not included, children, in the debtors. So, children, we can sum up by saying that debtors are the person or firm or an organization who owes money or money's worth to any business enterprise. The person, firm, or any organization who takes goods or services on credit from the business are termed as debtors. Say Ram has purchased goods from me on credit, he becomes my debtor. Now, let us talk about creditors, children. A person to whom the firm owes money on account of credit purchases is called a creditor. Children, creditor is completely opposite to debtors. Now, when we talk about creditors, children, the person, firm, or any organization from whom goods or services are purchased by a business on credit is called creditor. Say I have purchased the raw material for my company from Sham and Company. So he becomes my creditor because I have purchased the goods from him and I owe, as a businessman, I owe money to him for the material which I have taken from him on credit basis. The business owes money to them. The amount payable to the creditors, children, kindly note, is a liability of the business. Now, let us talk something more about creditors. Creditors, children, include the trade creditors or creditors for goods purchased on credits. Loans and advances raised by the firm are excluded from trade creditors. So, children, today we have discussed about some basic terminologies including revenue, expenses, purchases, sales, debtors, and creditors. Kindly go through the video carefully and clear your doubts and concepts about these terms over the Microsoft Teams. Thank you. Have a good day.